Okay, welcome. Those of you who are able to join us this afternoon, myself, Jason McClellan, we have Mark Covert with us on the call as a presenter from Insurance Advisors Direct. Again, we appreciate you joining us. And again, this topic today is something we've had asked a number of times, and is something that we're going to be spending more time on this year. And that is ultimately, what other plans could make sense for your clients when you're talking about Medicare supplement products. We know and have known for many years that Plan F is kind of the gold standard go-to product for all agents, but let's take a look at what other options are available to you, to your clients, and let's really key in on some key features to make sure that your recommendations make the most sense for your clients. And again, for those of you who may not be familiar with us, Insurance Advisors Direct, we are a national FMO representing 30-plus carriers across the senior market, life and health. And again, we represent about 15 different product lines. And our goal here is to simplify your success with those senior life and health products. If you have any additional questions, of course, at the end we'll be taking some comments, and we'll be following up with each of you after this meeting as well to have a discussion if there's something more we can do. Now, quickly, this conversation, this webinar is muted, so the only ones that can be heard are the presenters. If you do have some questions, we would love to make this as informal as possible. Please make sure you type those into the box in the lower left-hand corner. We will try to address those as they're asked, or we will address them as we get to that portion of our webinar. And this is not going to be a long webinar. We're just going to key in again on some of the main features and reasons why both the industry, carriers alike are promoting Plan G, and why we as advisors and as FMOs across the country, why we also are recommending that you as a Medicare supplement producer take a look at Plan G and may find after this meeting some very good reasons why you might present a Plan G over a Plan F. And in this series, we're going to also address the Plan N as well as the high deductible F. So again, just giving you some alternate ideas to the traditional Plan F. Now, as you can see, we had originally promoted this meeting as the top 5 reasons. Well, once we sat down, we realized, well, there's a number of other good ideas and reasons why you might look at a Plan F. So we added one more, so today you get the special privilege of hearing about the 6th one, and we'll get to that as we go here. But anyways, let's get started with some of these key reasons why you as an advisor might look at a Plan G over a Plan F. Well, the first and probably the most obvious is that Plan G is traditionally, with most carriers across the country and in most areas, going to be more affordable than a Plan F. Now, that goes without saying when you're looking at plans that are different in benefit structure than a Plan F that is the most comprehensive first dollar coverage plan, that of course the other plans should be more affordable. Now, what you'll find is that surprisingly other plans are not more affordable than a Plan F, and there's a lot of reasons for that. We won't get into those today, but here we put together the side-by-side benefit chart of what Medicare supplements are required to cover. Here are the different benefit structures, and then what a Plan F, which boxes that checks, as well as which boxes the Plan G checks. So you can see that as of today, after Medicare modernization a few years back, that Plan G is very, very similar to Plan F. It covers really all of the same benefits except the Part B deductible. So for this year, if you didn't see, the increase in the Part B deductible is now $166. So really, the most exposure that your client has when it comes to a Medicare supplement is $166. Other than that, Plan G is going to pay across the board on everything else, including the excess charges, which is one of the areas where Plan F has always gotten a lot of recognition. So that's one of the reasons why Plan G is going to be more affordable, is first off, and we're going to talk more about this, But first off, the Plan G is going to be, more affordable. In many cases, it's a brand new product. In many cases, it is, been repriced by many of the carriers. So we're going to get into some of those things. But, again, it's going to be a more affordable option. And when your clients are looking at, well, which coverage is right, which plan is right, consider, first off, what's important to them, what their needs are, and maybe what their budget is, what they can afford. Why would they overpay? If maybe this simple benefit of Part B excess charges is not necessary, would you want to insure them for something that they're not going to use or not expected to use? So again, just some things to keep in mind. So let's keep going here and consider some of the reasons why, first off, it's going to be more affordable, and then some of the reasons why it also has some better rate stability. Because as you know, the plan that you sell your clients today, we hope works for them on down the road. Maybe they're turning 65. Maybe they are just getting into Medicare. They're fairly healthy. They just retired. They're active. We see that happen more and more today. So do they really need a plan as comprehensive as a Plan F today? Maybe not. But what's more important is the plan that they do have in the coming years when maybe their health decreases, when they do need some assistance, will it be there for them and will it be affordable to them? So how does Plan G accomplish that? Well, first off, it does not cover the Part B deductible, as we just discussed. Well, the Part B deductible will go up in most cases every year. There's some years where it has not, or maybe it's maintained, but in most cases it's going to see some slight increases. Well, as that plan or the Part B deductible increases, of course, the carriers have to compensate for that. So what they do is they start factoring that into their rate increases. Well, Plan G does not have a moving target like that, so you will not see those rates have to go up as the Part B deductible increases as well. Another point here, it is a newly filed plan with most carriers, or some carriers, and recently filed rate reductions with others. So we are seeing, of course, a very heavy industry push towards the Plan G. And with that, and some of the reasons behind that and why Plan G is more competitive, we talked about that in the last slide, but this would be one of the reasons, because if it is a newer product to this carrier, if those rates have been refiled, it means that their population of seniors on that product is probably very small. And it did not require the rates that it was at currently, so they were able to take a rate reduction. Or for the carriers who chose to introduce it as a new offering, of course, we would know that their their consumer population, Medicare population, would also be very small in this product, which means that they have not incurred a long-term large amount of claims, keeping their claims loss ratio down low, which of course means better rate stability, both in the short term and in the long term. So those are a couple key points to think about, is not just today, but how are these rates going to maintain to be more stable going forward. Plan G has the evidence and shows that it could be very stable for a very long time. And even carriers who have had it for a number of years, they have been able to actually take rate reductions, which shows that, again, it's just not being utilized, and the people that are on that book of business have been performing well. Another point here, not required to take guarantee issue business. Now, some carriers may opt to do that, but it is not required under these plans to take individuals. So guarantee issue business is different than open enrollment. Open enrollment is when somebody has turned 65, gone on to Part B for their first time, and they get that open enrollment period. That you can go into any plan with any carrier. So G is not excluded. But let's say somebody comes off of a Medicare Advantage in their first year, it's their first time. Somebody loses their group insurance. Somebody moves out of a service area and loses their Medicare Advantage. There's a few reasons that would create a guarantee issue right. Well, that guarantee issue right, you can go to some of the different Medicare supplement plans, but you cannot go into a Plan G, or at least the carrier is not required to offer Plan G. This does contribute to the rate stability because in this case now what you're going to have is under Plan G for the most part. You're going to have a population of maybe open enrollment people, and you're going to have a population of people that were underwritten. But you're not going to have that third population of people that are guarantee issue that the carrier is just forced to take. And for the most part, people are only going to use their guarantee issue rights if they need to because their health prohibits them from answering those health questions. So another thing to keep in mind when considering longevity, long-term rate stability, better long-term solutions for your clients is the fact that this is a big item and it's not heavily talked about. So it's something you want to take into consideration, maybe briefly review with your clients, but definitely take into consideration with your recommendations. And then the fourth, which is fairly obvious, it does not have first dollar coverage like a Plan F. So Plan F, anybody goes for any simple reasons, there is no out-of-pocket for your clients, which that's why it's been so popular. But again, that means that the plan has to be prepared that anything happens, whether it be small or large, they're going to be on the hook for some dollars. Where Plan G has a little bit of a cushion there because they are not responsible for that Part B deductible. So there is some small out-of-pocket that the person could incur, which means maybe some of their, if they were to use this or go to the doctors for something not totally necessary, maybe they would think twice about that. And actually that's what the government is actually reviewing when it comes to Plan F, is not liking that first dollar coverage. But because Plan G does not offer that, again, they are less on the hook for those first dollar, or they're not on the hook at all for those first dollar, that first dollar coverage, so it would help with their rate stability as well. The next and third slide here, our third point, is changes are coming to Plan F. If you haven't heard this already, there's been a number of articles published. There's been a number of organizations that have been sending out information. Sometimes it's maybe a little bit wrong or a little too aggressive with their outlook on Plan F. But the fact of the matter is, when we attended the Medicare Supplement Conference last year, the government made it plain that they do not want Plan F as it is today. They do not want that first dollar coverage. So it was announced that everything had passed, and been signed off, that in 2020, Plan F will come with a deductible. At the time, there was some debating as to what size of deductible we'd be looking at. Would it follow the Plan G, where it would just eliminate coverage for the Part B deductible? That was what they were encouraging the government to do, but at that point we did not know exactly what changes were coming to the Plan F, but changes are coming. And does that mean the Plan F could be discontinued? I know I've seen some organizations publish information that says Plan F is going away. That has not officially been determined, but it could happen. So again, if changes are coming to Plan F, and that's where this important point comes down, is what will happen to rates long term. Because if our whole point is what are our clients paying for their coverage, is it affordable, can they continue that coverage long term, we can look down the road and know that when changes like this occur to a plan, you have obviously an older plan with an older book of business. Claims are increasing, which means the cost of the plan has to increase, which means they have to file for rate increases. Well, what if 2020 comes, Plan F changes, people aren't as excited about Plan F, so they start looking at other options. It's very difficult for a plan to sustain their rates when there's no new, fresh business coming into that. Very, very difficult. What happens, too, is then as the rates increase, the healthier people start to look for more affordable options because they're healthier. They have more options. They can pass through the underwriting. They can answer the health questions, so they can look for another carrier with the same exact plan or a different plan that's going to save them money. Once those healthy people start exiting Plan F or any other plan, it becomes almost impossible for them to maintain a very competitive rate. And that's when we start to see some sizable rate increases. And now, unfortunately, for people who are less healthy, they may be stuck in that program if there are not other options or other ways out for them. So long term, we want to talk about the fact these changes are coming to Plan F, because long term, these changes will very much impact the rates going down the road. So another reason that if you're helping your clients who are maybe healthy today, but they're 65 or they're younger, not younger than 65, but 65 to 70, they're still young, they're still active, you might want to consider which plan you're putting them into. And again, if that long-term rate stability and the evidence of that is there, and these are some things to consider. So the next slide, and our sales point number 4, is keeping in mind that are your clients paying too much or overpaying for the benefits that they aren't using? And this would go back to persons that I spoke about who are younger, healthier, may not ever doctor at all. Do they need the full, complete benefit package like a Plan F offers? And is it worth them paying that extra premium for such a very small benefit in its own right? So let's consider, we ran some rates here, and we ran these in the Michigan area where our office is located. So you see the zip code 48375. You've got a female non-tobacco, age 65. So here in this area, the annual premium for this person for a Plan F would be $1,649, and you can see what a Plan G would be, $1,357. So that for them would be an additional premium of $292.32. It's a pretty big chunk of money, especially for our clients who are retired on a fixed income. That $292 is well beyond the $166 benefit that Plan F covers that Plan G does not cover. And again, that's only for people who actually need to go to the doctor and who may end up meeting that Part B deductible of $166. With a Plan G, they're still further ahead, as you can see, by maybe $130 or so. But those individuals who are healthy, at this point, you can see very obviously that they would be overpaying for their coverage. They're essentially paying $292 for $166 benefit, and they're not even going to the doctor. So keep that in mind, again, when you're talking to your clients, you're evaluating their situation and determining the right course for them and the right plan for them. The next one increases persistency and reduces risk of losing your clients. So obviously from a business standpoint, we want our clients to be happy. We want them to enjoy working with us, give us referrals, and stay on as clients. So if you're putting them with the wrong plan, putting them with the wrong carrier, we know how devastating large rate increases could be to our book of business. We've seen them happen over the years with many different carriers that may not be in existence any longer, and agents spend a lot of time going back out, working with their existing clients, trying to find better solutions for them. And again, sometimes those people may be stuck in that program or might be limited as to what options are available to them. So you're going to want to make sure that by recommending a program with long-term rate stability, as well as recommending a program that is much more competitive to begin with, you're really doing a better job for your client, and you're setting yourself up for, again, increased persistency. Because let's face it, if you're working in the turning 65 market, there are a lot of agents out there attacking that same market. So you go in with a higher priced product, agent comes behind you with the Plan G, can show that how they can save your client $292 by very simply just giving them a Plan G, and all they're at risk for is $166. To the right client, that's going to make a lot of sense, and they're going to maybe make that switch. So again, be mindful when you're dealing with your clients that not only are you meeting their needs, but you are offering them a very competitive option. And again, working in a competitive market, is there going to be agents coming behind you maybe doing this exact same thing that we're talking about today, and you get priced out? So again, another point just to keep in mind when you're out there. So here's the sixth. Here's the extra selling idea that we added as we were putting this together. When you free up those premiums, it does a number of things. So you could free up premium for cross-selling opportunities. We know that in most cases, what your client's needs are doesn't just stop with a Medicare supplement. That's kind of the big one. That's what we get in the door, and that's what we initially start talking about. But, of course, it doesn't necessarily mean that's the complete coverage they need or that's where it stops. So in this previous example, we see that Plan G offered a savings of $292.32. Well, what could be done with those extra dollars? Well, we know that you're really going to have to talk with your clients and talk to them about maybe the prescription drugs they're taking, obviously within your legal rights, but you're going to want to make sure you're recommending a good PDP program for them. That's going to cost them some premium dollars. The big one today is dental, vision, hearing. A lot of clients, even if you're not a big fan of selling dental, vision, hearing products, a lot of your clients want it. They're asking for it. Well, that premium savings very well could cover what their dental, vision, hearing premiums might cost. We have other agents that will use those dollars to put into final expense products or maybe even short-term care. So all of these products are just examples. I mean, you could come up with your own, but these are some of the more popular options that we see being added into a Medicare supplement presentation. And remember, all of these plans are legal because Medicare supplements are not under the same jurisdiction as Medicare Advantage, so you can recommend many other options just like the ones you see here. So again, these are just some additional selling ideas that Plan G can offer, some reasons why it's a good idea to be recommending Plan G. And if you're not already doing so, hopefully we gave you some good ideas as to why you might start to incorporate or look at Plan G in the future. So hopefully this has been informative for all of you that have made it out. We are recording this, so if you're interested and you want to review this again or you want to talk to us one-on-one about some of these points, please don't hesitate to give us a call. Please don't hesitate to ask for the recording. We'll make sure we send that out. And again, Mark or I are available to talk to you, to discuss those questions. Now, I haven't seen any questions. I did notice somebody was having some trouble with their audio connection. I hope that was fixed. Are there any other questions about some of the points we discussed or any other questions about some of these selling ideas that we can answer today? Mark, did you have anything to add? Did you have any other points you would like to bring up that I may not have covered properly? Okay. Well, I don't hear Mark, so I'm guessing we covered it all. I don't see any questions showing up, so it looks like hopefully we covered it well. And again, hopefully we gave you guys some new ideas. You can keep an eye out. We will be sending some additional emails, invitations to some of our upcoming events, both live training workshops as well as webinars. I believe the next one on our calendar, we've got some long-term care events going on. We have some new sales and marketing tools coming out for Medicare supplements specifically. We'll be announcing those in the next couple of weeks. We have some, new Medicare selling ideas related to the high deductible F, to the Plan N, and we also have some new carrier announcements coming out in the next couple of weeks as well. So January is going to be pretty jam-packed, as well as February with some new announcements, newer releases, and some additional webinars and training events. So keep an eye out for those. We hope all of you can make it out. And again, if you have any additional questions, just give us a call. And we look forward to talking to you. We look forward to working with you in 2016, and we wish everyone great sales success. Thank you.